You can see that there is no movement in terms of delta, and yet the prices came off the top edge without any selling. See how the prices dropped off here without any selling? So coming into the actual cash open, the dealers are actually accumulating some longs. They managed to get some longs into that phase there. So the dealers are accumulating some longs, and they're withdrawing liquidity below the market. So that tells us they can't get long unless they can't. Sorry, the dealers are starting to accumulate some shorts, but they can't get short unless there's some longs coming in to pay across. Nobody was buying. Nobody was stupid enough to think this was a buy trade. So because of that, the dealers didn't manage to get the kind of size that they would like, and that's actually really good for you. Why is it really good for you? Why is it actually really good when the dealer doesn't get heavy short inventory? Think about it. Anybody know the answer? Because they have to go asymmetrical. They actually have to go asymmetrical. So what has to happen is the dealer has to make the adjustments to the order flow, not by their inventory, but by the price action, right? So if the selling does come in as expected, it's going to cause a fast sell to the downside. So because they didn't get the buyers coming in to give them a heavy short inventory, they're obviously very, very open to the fact that this could open the door to a very big sell-off. And obviously what happened is, as soon as the cash open hit, the selling came in, they had to pull hard. They really had to pull away hard away from that selling. And obviously what happened is they got a retest back up into that same inventory level, and they managed to at least pick up some shorts up here. And obviously most of the action came from this spring here at 60s. And obviously what happened is immediately it just sold straight off. And look at the size of that candle, guys. This is a 15-second chart. So you knew where that level was, and it gave you the perfect lean, didn't it? Because look at those voltics at the top edge. That's where the lean came in right there. And obviously you had to be pretty quick, because if you missed that starting sell, you were never getting it. If you tried to chase that with a market order, you were getting murdered at that stage if you started to chase it because you were too slow to recognize it happening. So you've got to be ready to go, right? Literally, the engines have to be already revved up. You have to have the foot straight down on the gas pedal, so that all you're having to do is lift your foot off the brake and you're off ski. Launch control, right? Launch control. Who's got launch control in their cars? So when you've got launch control, you know exactly what we're talking about. The wheels are spinning, your launch control set. All you've got to do now is lift and you're gone. So if you've got launch control in your car, you'll know exactly what we're talking about here. So great sell-off, and you can see we got a continuation sell. Selling coming in at lower prices, still seems to be moving the needle. And then we just got that brilliant sell-off down in towards bottom edges. And that was beautiful, wasn't it? That was absolutely stunning. Now what happened here? The dealers rotated out of their trade into a long position right here, didn't they? You see that, guys? Do you see that, John? You see that, Mike? The dealers rotated out of their long position, out of their short position, into a long position here. So there it is there. There's that rotation. It was kind of starting to become visible down here with the lack of selling. So we can now see that the lack of selling in here opening the door for the dealers. The first kind of sign of it was maybe this little phase here where they put a little ice order in here and absorbed the selling. So they got a little bit of long business here. They picked up a lot of long business here. And this became a very obvious starting point, perhaps, for a buy trade. You can see it was a starting point for a buy trade. It certainly wasn't a finishing point. So then when the selling came back in, they obviously adjusted straight back against that selling because the dealers have got long inventory. So there's no real requirement for them to pull away so hard because the dealers, it's not in the dealer's interest to pull away, but they maybe got a little bit of a fright with the amount of selling that came in there. So they pulled away to try and get the bottom edges. You can see a very, very big jam. Then you can see the dealers actually bought the bottom edge. See it? You see the dealers buying the bottom edge? Quite visible. So if we zoom in on that little phase there, you can see that the selling kept coming in on these two candles here, but we're nowhere near the bottom edge. So we now know the dealers are now involved in this. This is the buy box for the dealers. So the buy box for the dealers suggesting that the price is probably going to go up from there. The price goes up from there beautifully. And then from that point onwards, you're trying to get a new read. So what happened here? Exactly the same happened, guys. Exactly the same happened. If you take a line across there, for example, you'll see that that dealer buy was right there. So there's the dealer buy against that lean right there. And what did they do? They came back down again, and the dealers were buying again. You can see it. You can actually see it. The dealers bought again right there. There's your next lean. What happened? The price went up a little bit. The price came back down with heavy selling. What happened next? The dealers didn't buy it this time because the delta agrees with the price. So the dealers actually ended up doing quite good business there overall. But what happened at the bottom edge here? Well, you can see there's huge stop out volume here. Huge. So you're obviously thinking that's probably the end of the move. You can see that every time we get these big stop out volumes, for example, here we got big stop out volume on this one. What the hell am I drawing here, guys? What the hell is this? What the hell am I doing? So we got a big stop out volume in there. And you can see that the price went up. We got huge stop out volume here. The price went up, and then we got huge stop out volume here, and the price is rotating. Remember, every one of you has got this on your Seria charts and on your Ninja Trader. It's just the fact that this is now a volume chart. I've changed the candlesticks to volume. Not volume, but volume candles, not volume set candles. You know, like 500 volume or 1000 volume. It's just volume candles, so that you can see the heavy volumes at certain points. So when you see heavy volume like this into bottom edges, it's probably a buy reversal. And that was the end of the down move. You can see there was a little bit of asymmetrical buy-side responses to that. You can see that. So the dealers have obviously been buying this phase here. You can see the asymmetrical phase through this little phase here with the candles going up with no buyers involved. So you know that that's another buyable opportunity, and the price rallied beautifully off that print. So where are the dealers positioned right now? At the moment, I would say fair value. The dealers seem to be fair value. They don't have any particular net position that seems to be interesting. The highs are about right. So the high of the delta was the same high as the previous price action as well. A little bit higher, just a little bit higher, but so was the price a little bit higher. So I'm not getting anything from the deltas at the moment to give me a strong idea of what the dealer is interested in just at this point. So for me, the action's finished for the time being. We can relax, chill out, and see what the rest of the morning brings us. So, did we ever get a curve trade? No. We never got a curve trade, guys. So we were talking about waiting for the curve trade to show up. And we never got it. Look, we never got it. So it started to look as if we were starting to see a belly fly trade in here. And that's obviously a belly fly. So what do? We move over to the belly predictor to see if that's going to give us a belly fly trade. So when we look at the belly predictor, what are we asking? We're asking to see if there's going to be a belly opportunity to trade the bonds with. So when we look at the belly predictor, the idea is that the divergence should be showing up between the blue, which is the fob and the knob spread. There should be a large divergence for a belly predictor. So up at the top edge, you can see the blue line was rising, the purple line started to fall. That's a belly predictor. That predicts a sell on bonds. When the blue line starts to fall here, we're obviously watching that. We're trying to figure out whether there's going to be a belly trade down here. And as it transpires, it's not just quite good enough. The lower the blue goes, the more we like the trade. It's good, but the reason why it's not quite good enough is because we start seeing that dropping, not rising. It'd be far better for us if we started to see a bit of a bullish spread here. But we're not quite getting that, are we? So that's keeping the sell pressure on bonds just now, which is why we can't manage to get the buy trade off the lows. But there's definitely a belly sell in here, isn't there? Can everybody agree with that? you'll see that there's a belly spike right there. That's the belly sell. Because obviously that reveals itself as a bottom edge bond. So that gives us an idea that there is enough in it to squeeze a bit of buying into the bonds, because we knew that there was a belly sell coming out. Well, plus the fact we already knew that there was a belly sell coming out to play anyway, but that's the belly sell right there. So obviously as that starts to fall, you might not have thought it had enough in it, which is fair enough. I didn't think there had been enough in it. But obviously when that starts to fall, it starts giving us 5/10s durational divergence, which we all know is a good durational divergence to have, is the 5/10s, and there's your possible 5/10s durational buy trade right there. So whilst the belly isn't a brilliant sell trade, it still gave you enough evidence to get a 5/10s durational buy trade. Yes? And obviously the buy trade from that point has done okay. We've went fours to a high price there of 22s. It's a pretty reasonable. This is a 15-minute chart, by the way, so it's quite a long-term perspective when you're bond trading. So because we're trying to get ideas about curve narratives. So it's good, but it's not brilliant. So we've just had to be a little bit cautious about that. I wasn't necessarily a buyer on that candle because I still felt that because the knob spread was starting to move, I still felt that there was a chance we might end up with lower prices. We did actually end up with lower prices, and it just kept me on guard to be a little bit patient for the buy reversal off of this. I'd bought it too aggressively before. We still made some nice money, but we obviously ended up with a squeeze, and then we come off it. I didn't sell down into the squeeze, but I did buy the bottom edges again, and we've managed to make a bit of a flip back away from that belly bottom edge there. Yes, everybody understands that. So what's the next trade? Well, it looks like it's going to be a sell trade. I don't think there's going to be a buy. The belly should be showing up, but it's not. So I'm hoping that in the next sort of 10, 15 minutes, we've got a belly, which is going to give us a bond short. But we will see.